Good morning, you're watching Market Cafe on ET Now with me, Soumit Sarkar, and my co-anchor, Vinny Motiwala. Let's first look at the US markets, Vinny. Yesterday, if you see, there was a sharp rebound that we have seen, but futures continue to remain flat as the key November inflation report is still awaited. So what are you picking up from the US markets?
Absolutely, Soumit. But, let's just take a handover. Like you mentioned, stock futures surely are a bit weak coming in trade as well and flattish in trade. But Dow Jones actually ended more than 500 points higher at the start of the week. So surely, there was a subdued trade coming in last week. But yes, they did manage. Now, inflation data is one key point you're waiting out for. Plus, you have the Federal Reserve's meeting coming in as well. So that is a point coming in, and you're watching out for that as well. Now, US stocks advanced with investors gearing up for the consumer price data, which will be made today as well. And the meeting is starting today of the Federal Reserve, 13th and 14th of December. So we'll be keeping an eye out on that one as well. Now, in terms of overall, what we're seeing in terms of Nasdaq also, how that performed. Nasdaq was up by 1.26% in trade. S&P 500 up almost 1.4% in trade as well. So interesting handover that yes, we're getting in from the US markets as of now. Let's look at some of the individual stock names that we have and that were doing well in trade. We have Pfizer that gained almost 0.8% in trade. Microsoft Corp said that it actually tanked 4% in trade after in the London Stock Exchange in a deal that will see the stock exchange use software giants data and cloud infrastructure. On the back of this, we have seen some move coming in the stock as well. So yes, interesting handover that we're getting in from the US markets and European markets. Let's not forget they closed before the US markets. They actually closed a bit in the red and on the lower side. DAX was down almost 0.4% in trade. FTSE was down almost 0.4% on trade as well, and similarly for CSE as well. So yes, bit of a mixed handover that we're getting in from the global markets as of now. Look at the SGX50 trading almost flattish, just 0.1% almost gains coming in trade. So muted start is what is indicated even for the Indian markets.
Well, if you look at Brent crude, they were up around $2 per barrel levels yesterday, and this was on the back of three reasons. Firstly, if you see pipeline disruption that happened in US, then there was Russia threatening to do a supply cut because of the price caps, and then China has also been loosening its COVID restrictions, and all these three factors pushed Brent crude higher by around $2 per barrel. On the other side, if you see the Singapore gross refining margins, which is the key benchmark for the Asian refining companies, that came down a bit from around $8.4 per barrel to around $6.7 per barrel, and this was on the back of a decline in all the product spreads that we had seen. However, one of the product spreads we had seen a spike, and that was LPG. Other than that, all the other product spreads declined on a day-to-day basis. On the gas side, if you see, European gas prices corrected marginally, but this was on the back of sufficient supply that they have, that the European nations have, and also because of higher nuclear output that we had seen. And on the US gas price, if you see, there we had seen a spike, and this was because of a colder weather forecast for Friday. Now, on the Asian side, if you see the JKM, that is the Japan-Korea marker, that is the Asian benchmark, that remained largely flat on a day-to-day basis. There was not much of a movement. Currently, they are trading around $33.7 per MMBTU. So crude prices higher, Singapore gross refining margins lower, gas prices largely mixed globally. That's the cues coming in.
Okay, that's the cues coming in when you see coming in on the crude market as well. But, let's just look out for the big events that are there, we'll be watching out for. Obviously, like I mentioned, you have the US CPI data coming in today. Today, also the FOMC meet is starting in the US market. So that's going to be on 13th and 14th of December. Moving on, we also have on the domestic front, Paytm will be considering the proposal for a buyback. Colgate has its analyst meet on today as well. That will be at 10:30 a.m. And this is Prabha Narasimhan's first analyst meet that will be coming in today. So that's a big one that everyone's watching out for as well. In terms of IPOs, you do have Landmark Cars IPO, which is opening for subscription today, goes on till 15th of December, while other events, G20 meeting in Bangalore, FIFA World Cup in terms of enters the semi-final phases. So that's an interesting event that everyone's watching out for today, Soumit.
Well, moving on to some global news. Now, Sam Bankman-Fried, who founded and led FTX, was arrested in the Bahamas. Now, he was criminally charged by the US prosecutors, but the charges have not been disclosed yet. A liquidity crunch forced the Bahama-based cryptocurrency exchange to declare bankruptcy. Now, the Attorney General's office for the Bahamas said it proceeded with the arrest after receiving formal confirmation of charges against the bankrupt company's CEO.
And traders are worried about how long Canada's TC Energy would take a to clean up the largest US crude oil spill in nearly a decade. Now, the company's Keystone pipeline was shut after a leak last week. The company told officials that they have not yet determined the cause of the spill, and TC Energy and the country officials met briefly to discuss efforts to contain and clean up the spill.
Well, Peru's a new president offered lawmakers a plan to bring elections forward by 2 years. Now, protesters were sparked after he took over. 6 people lost their lives in the protest. The protesters have argued that the new president wasn't elected by the people.
And the global public and private debt saw its biggest drop in 70 years in 2021. This is according to the IMF report. Now, however, the IMF has flagged off that overall remained well above the pre-pandemic levels. IMF said that the total public and private debt decreased by 10%. In dollar terms, global debt still continued to rise.
Well, the November US budget deficit jumped by nearly 30% on a YOY basis. Now, this jump was led by a fall in revenues and a sharp rise in overlays for education and healthcare. Now, the receipts for the November month, if you see, fell nearly 10%, while outlays rose by a record 6%. But driving the revenue decline was a 64% increase in individual tax refunds.
An update coming in from Russia and Ukraine. Russian missiles, artilleries and drones hammered targets in eastern and southern Ukraine. The group of 7 promised to meet Ukraine's urgent requirements after President Zelensky urged them to provide better artillery. The White House also said that Washington's priority was to boost Ukraine's air defense.
And more news from the deal street. Tech major Microsoft will buy a 4% stake worth nearly $2 billion in the London Stock Exchange Group. Now, Microsoft has a long-standing relationship with the London Stock Exchange Group, and this will be a part of a 10-year commercial deal which aims to migrate the both operators' data platform into the cloud. Now, Microsoft will be buying London Stock Exchange Group's shares from Blackstone and Thomson Reuters Consortium.
And update coming in from India-China border. In a disturbing development, reports emerge that China's PLA engaging Indian Army at the line of actual control in Tawang sector of Arunachal Pradesh on December 9th. News agency reports PTI reported. Now, quoting military sources that the face-off led to minor injuries to the troops of both countries. We have Shinjoy who's joining in with us with more details on that. Shinjoy.
Troops clashed on the 9th in the Tawang sector, right on the line of actual control. There were no serious casualties, but there have been minor injuries on both sides. Right after that, on the next day, there was a border meeting between senior officers of both sides, and it appears that the problem has been sorted out. Of course, the primary problem is the differing perceptions of the line of actual control, and that naturally has to be resolved at a higher level. That apart, it looks like at least the things are under control, but what we know is there have been injuries, there have been minor injuries on both sides. And yes, we also know that contrary to what is being talked about, there wasn't another clash on the 11th. One clash on the 9th, minor injuries on both sides, and now what we are hearing that after the meeting on the 10th of senior officers, things appear to be sorted out, at least for now.
Well, we also spoke with the former ambassador Suresh Goyal, who shares why the Northeast is a point of contention and will remain so for a while.
Those interactions have taken place in the past with They may take place in the future again at different kind of levels. But you see, it's important in all those processes to keep asserting and keep conveying what your claims areas are. And uh, anything else that happens afterwards is basically a matter of negotiation. Therefore, talks are taking place. Talks take place both for the Ladakh sector as well as this. There are combined talks. But, and as I said, till a few years ago, we thought that the eastern sector is not a problem, but eastern sector could be a bargaining point, number one. And eastern sector could also be because over the last 1 decade, Tibetan issue, the succession to Dalai Lama has gathered some momentum and importance. For China, Tawang is very important because Tawang is the biggest Tibetan monastery in the region. And for them, any settlement of Tawang would relate to the succession of Dalai Lama.
An update coming in from G20 as India prepares for a meeting under its G20 presidency. The first meeting of the development group working group kicked off in Mumbai. India will use this platform to bring to the fore issues that are relevant to developing countries. In an interesting move, India has created a new group within G20 called the Startup 20. Let me take it across to my colleague Ankur Mishra, who spent some time on this report, who's giving us more details from the G20 event as well. Ankur?
Development Working Group meeting begins in Mumbai on Tuesday, and there are many firsts which can be talked about in the G20 meeting. Now, it will be first time that India will be setting the agenda of G20. Now, first time India has created a group in G20 called Startup 20. Remember, India has more than 80,000 startups, and hence a new group has been suggested by India. Now, this is also first time that G20 meeting is spread over a year, 215 meetings in 56 cities, and each state will get representation during the G20 meetings, which are going to be held throughout the year. Now, on one hand, there will be important discussions on sustainable development goals, on how women empowerment can be done. There are important discussions which are also going to be held in the finance track meeting, which is going to be held in Bengaluru. Remember, when the global headwinds are there due to economic front, due to recession, India has been steadily growing and has been the fastest growing economy in the world. So it will be important to see that in 1 year how India project itself and also set the agenda of G20 meeting.
Okay, on that note, we're going to slip into a very short break, viewers. Don't go anywhere. We'll be back with more domestic update, more stock-specific update after this break.
Welcome back. You're watching Market Cafe on ET Now. Moving on to some domestic news. Now, it's the first time in 11 months that the consumer inflation has dropped below the 6% mark. Now, the November CPI stood at around 5.88% versus 6.77% reported in the previous month. Now, the big drop has come in food prices, with inflation well below the 5% mark in comparison with the 7% number that we had seen in the month of October. Now, will these numbers put the brake on rate hikes? That remains to be seen. Meanwhile, we also had the October industrial output data that shows that the industrial growth has slowed down to -4%, which has come at a 26-month low. We also spoke with our consulting editor at ET Now, Maithili Bhusnurmat, who tells us the significance of these prints.
Well, this evening brought some good news as well as some bad for the government and the Reserve Bank of India. Consumer price inflation and retail inflation, which has been the bugbear of the Reserve Bank of India, came in at an 11-month low. But to compensate for that, we saw industrial production also drop to a 26-month low. So first, let me talk a little bit about the CPI, because that's the good news, that since January this year, inflation has always trended above 6%. So after January, inflation has finally come in at below 6%, which is the upper end of the RBI's inflation target range. Inflation for the month of November came in at 5.88%. Best of all, it was driven by food inflation, which has come in dramatically lower at 4.7%, vis-a-vis 7.01% in the previous month. Now to turn to the bad news, industrial production saw industrial production actually contract 4%. Worse was that manufacturing contracted by 5.6%. There was very little good news on the industrial production front, barring electricity, which grew very nominally by 1.2%. Mining contracted, manufacturing contracted, consumer durables as well as consumer non-durables also contracted and in double digits. So overall, some good news, some bad. Clearly, there's a great deal of work that still remains both for the RBI and the government.
And India's retail inflation declined to an 11-month low in November as compared to the last month. Now, the consumer price index in the month of November has declined to 5.88. To know more about how the November CPI would affect India's economy, we spoke to Emkay Global's lead economist, Garima Kapoor, who is the chief economist, as well as Madhvi Arora also. Let's go across and understand, what they make of the numbers coming in.
IIP data is currently indicating the global manufacturing slowdown, which is reflecting in India via the export slowdown, which is leading the way at this point in time. Also, I think, because there were some holidays in October, that may also have marginally hurt the manufacturing activity in certain segments. But that's, I think, if you see the recent PMI performances have been quite steady versus emerging market peers. But within that also, the exports are one segment which are indicating rapid weakness. So I think in the near term, exports are going to lead the slowdown in India, which is impending and probably will catch up for the rest of the world.
Remember, you're more worrying about the core inflation trends, which are remaining sticky. The recent RBI policy has made it quite emphatically clear that they are worried about an elevated and sticky core inflation. So while it's time to feel good about the fact that your CPI is finally below 6%, I think some bit of it is already into seasonal, but it's more important that whether it sustains over the next 3 months, and most importantly, whether your core inflation trends start to come off. There are no early signs of that happening yet.
Well, moving on to some M&A action now. Yesterday, just at the fag end of the market, if you see, Dalmia Bharat announced an acquisition of the JP Group assets. Now, what they're acquiring is a cement capacity of around 9.4 metric ton. Then there's a clinker capacity which is close to 6.7. Then there is thermal power plant of around 280 megawatts. And the total EV that they have set for this acquisition is close to 5,670 crore. Now, what does this mean? Now, if you see what analysts are suggesting, that there could be some excess power assets that this acquisition has. And if you see the valuations that analysts are giving at around EV per ton basis, if you see, analysts are saying that the current acquisition is close to $73 per ton. And if you remove the excess power assets, then the valuation comes down to around 61 to 63 per ton dollar. That I've been seeing. Also,
this is, adding to the step towards, the vision. Mainly, they want to become that pan-India player. Right. This further is giving them that push as well, right? And, when you include these assets, as we are reading right now, is Dalmia's potential capacity would become 58.5 metric ton by FY24, which is almost the 9% market share. So that does give them a lot of addition in terms of that as well. And
this also means that they will be just around 13 to 15 MT ton away from their FY27 target, which stands at close to 75 MT. But do remember that this is a vintage assets and it has not been in use for a very long time, and there was no much interest coming in from many buyers for this asset, and that could be one of the reasons why the enterprise value is nearly 30 to 40% lower compared to the replacement cost of building this actual assets.
Absolutely. Just slightly, we'll require some bit of clarity. At least he's coming in terms of the plant-wise breakup that we'll be looking at for the acquired assets as well. And availability of limestone reserves, a factor that we'll be keeping an eye out on. But yes, that was Dalmia Bharat. More deals, acquisitions that were coming in, and exciting space over there. But on that note, we're going to slip into a very short break. Don't go anywhere. We'll be back with more news updates after this. Welcome back, and you're watching Market Cafe on ET Now let's just look at what the commodities have done overnight as well. Yes, Brent crude oil as well as WTI crude oil prices seeing a slight bit of an increase coming in this morning as well. WTI crude oil $73.85 per barrel as of now. Brent crude oil still below the $80 per barrel mark, somewhere around the $78.6 per barrel mark. Natural gas prices seeing a rise, continuing to see a rise coming in as well. Let's not forget the pipeline in US, which had leaked, saw a bit of an issue coming in on that front. Supply concerns on that front. So US natural gas prices also saw an increase coming in. Other than that, in terms of gold prices, what we saw in terms of gold prices, yes, overnight we've seen a bit of a fall coming in gold prices. As around this morning, it's almost a bit of a muted sign that is coming in terms of the gold prices as well. And gold prices actually still continue to be below that $1,800 per ounce mark, trading somewhere around the $1,795 per ounce mark as well. Now let's look at what the Asian markets are doing, and let's just start with how the KOSPI has actually performed. What we're seeing in terms of the KOSPI coming in, trading with mild muted gains coming in 0.08%, and Seng is seeing gains of around 0.7% in trade. Shanghai doing almost flattish in trade, just 0.1% in trade in terms of gains, while Nikkei is up 0.4% in trade. Slight bit of a muted to positive start is at least what is coming in for the Asian markets, and maybe that is what we will be seeing coming in for the Indian markets as well. US inflation data is what everyone is keeping an eye out on as well. So muted start is what we're expecting for the Indian markets as well. So Amit.
Well, from commodities, now moving to stocks, and we have Ashesha joining us to give us all those stocks that will be in focus today on the back of news.
Yes, so KAC International will be the first one in focus. Some order win coming their way. They've won new orders worth 1,350 crores, and these orders are across segment. They've also informed the exchanges that orders include HVDC project in India and also the transmission line. So on the back of 1,350 crore worth orders that the company has won, this particular stock, KAC International, will be in focus in today's trading session. Moving on to PSP projects then, that will also be in focus, and that is because Ashish Kacholia promoted Himalaya Finance has acquired 10 lakh shares in the company, which translates to about 2.77% equity in the company. The acquisition is worth about 66 crores. Meanwhile, promoters also sold about 12 lakh shares in a block deal that happened yesterday. Important to include that key public shareholders in PSP projects include Abacus Fund and IDFC Mutual Fund. So on the back of the shareholding change that has taken place, PSP projects will also be in focus in today's trading session. Moving on to Exide Industries then, that will also be in focus, and that is because company has decided to explore the opportunity of merging its two wholly owned subsidiaries, Exide Lakeland Energy Private Limited and Exide Energy Solutions Private Limited. So on the back of this proposal of merging these two wholly owned subsidiaries, Exide Industries will also be in focus in today's trading session. Moving on to Dr. Lal Pathlabs, that will also be in focus. Nuvama, importantly, met with the management of Dr. Lal Pathlabs, and on the back of this particular note, some important takeaways are emerging. The management of Dr. Lal Pathlabs has said that they are some quarters away from attaining their pre-COVID levels. In fact, they also expect 2 more quarters before attaining stable growth trajectory. Moving on to some other internals, where they say that quarter-on-quarter growth offers some green shoots, and Dr. Lal is looking forward keenly as far as FY24 is concerned. De-risking, they are going ahead and de-risking from Delhi NCR region, where growth is expected to be in the low to mid single digits. As far as competition is concerned, they do say that they are seeing some bit of slowdown as far as competitive intensity is concerned. So on the back of these takeaways that are emerging from the management meet, Dr. Lal Pathlabs will also be in focus in today's trading session. Back to you.
Okay, Ashesha, thank you so much for the list of stocks to watch out for, especially Dr. Lal Pathlabs as well. But let's move on and go across to Vamakshi, sitting by in the studio with us as well. Vamakshi, very good morning to you. And, what are the brokerages saying this morning? What should we be keeping an eye out on that?
Well, absolutely, Vinny. Let's first start off with Dalmia Bharat. Now, this stock was a newsmaker yesterday and will continue to be in focus today on the back of a brokerage note that has come in from JP Morgan. Now, they believe that the proposed acquisition is coming in at an attractive valuation, and in fact, this acquisition is giving the Dalmia Bharat a pan-India footprint as well, and ramp up is the key in order for the acquisition to work in Dalmia Bharat's favor, is what JP Morgan believes. Apart from that, they also believe that Dalmia Bharat the balance sheet can absorb such a transaction, which is why they maintained an overweight on this counter given a target price of 1,845 per share. The IT sector is also on our radar. Now, Citi says that they continue to be cautious on the Indian IT sector space, and this is given the macro challenges as well as the elevated sector multiples. Capital allocations of large cap Indian IT companies have improved on their opinion, but nevertheless they're quite cautious on the Indian IT space, but Infosys is their top buy pick. And lastly, we will be focusing on OMCs. JP Morgan has come out with a report and they believe that overall OMCs are well placed. Oil price decline turns diesel gross margins positive is what they believe, and lower Brent would drive working capital going ahead. Apart from that, they are constructive on the OMC space, and IOCL and HPCL are their top picks.
Well, thank you, Amakshi, for all those details and exhaustive list of brokerages. Moving on, well, yet again, it is an ET Now news break which is confirmed. Tata Motors board panel has approved an in-principle plan for its subsidiaries, Tata Technologies IPO. Now, Tata Motors is exploring a partial disinvestment in Tata Tech this time around. Now, my colleague Anurag Joshi was the one to break this story on November 16th and is joining us on the phone line with more details.
So a board panel of Tata Motors has approved, in principle, the proposal for an initial public offering by Tata Technologies. Now, that's true. ET Now had broken the story about Tata Technologies' plan for an IPO on November 16, with details on the likely schedule of the equity sale. This could be potentially the first IPO from the Tata Group since 2004, when TCS sold its shares to the public. Now, according to a filing by Tata Motors on the exchanges, the IPO committee of Tata Motors has cleared this, exploring the possibility of partial sale of Tata Motors' 72% stake in Tata Tech. This IPO would happen at an opportune time, subject to market conditions, according to the filing. Now, Tata Motors owns a 72% stake in Tata Technologies, while the other shares in the company are held by other Tata Group entities. And interesting enough, there is a fund, Alpha TC Holdings, which is a Singapore domiciled investment fund backed by Mizuho Securities, which also has some stake in this company.
Okay, thank you so much for that, Anurag. But Voltas is another stock we're going to keep an eye out on today on the back of their management meet. And the company has flagged off some of the stiff competition that they're seeing in room AC segment in the near term. Let's go across to Lisa, who's standing by to give us more details on that. Lisa, good morning.
Well, good morning. So Voltas has updated in their recent management meet that they see continued stiff competition in the RAC segment over the near term as the peers are aggressively chasing the market share at the cost of their margin. Voltas has also updated that they have seen no positive trigger after the festive season and the demand has remained sluggish across the industry. And none of the industry players have also taken a price hike in Q3. So Voltas has ruled out double-digit EBIT margin in the near to medium term. However, going forward, they remain quite optimistic of the Q4 ahead of the summer season, and the H2 FY23 will also see the benefits of lower commodity cost. However, also they have added at the same time that the recent reversal in commodity prices can play spoil sport. So all in all, the situation is currently grim as per Voltas, but going forward, they are cautiously optimistic about the outlook.
Well, thank you, Lisa, for all those details related to the Voltas management meet. Moving on, Paytm could be the most awaited board meet today, and this is because the company will be considering buyback. Now, why it is the most awaited? Because since the IPO, we have seen a one-way decline in the share prices. Now, the IPO was done at 2,150, and the current market price of the company suggests a decline of nearly 75% to its issue price. Now, when the company announced that they will be doing this board meet, the management gave out one important line, and that was that the company's prevailing liquidity and financial position does indicate the management that buyback would be beneficial for their shareholders, which means that the company's cash losses have come down. And if you see the company's adjusted EBITDA also for the second quarter, that has sharply declined to around 167 crore rupees from 274 crore rupees reported by the company in the previous quarter. Now, how much cash does the company has? It has a cash balance of close to 9,182 crore rupees, but it can use only 3,582 crore rupees of this for the buyback. Now, why it cannot use the balance? Because the balance amount the company had raised during IPO, and those funds can be used by the company only for growing and strengthening Paytm's ecosystem and for investing in new business. Now, looking at the company's net worth, which stands at close to 13,600 crore rupees, the maximum buyback that the company can do via a tender route is close to 3,391 crore rupees, while via open market it can do a maximum buyback of 2,035 crore rupees. Now, if the company wants to avoid a special resolution, then the maximum buyback amount stands at close to 1,356 crore rupees. But the most important question today would be at what price the company will be doing the buyback. So keep an eye out for that when it comes to Paytm's board meet.
Absolutely, that's the one we're keeping an eye out on, seeing how the stock had actually moved. I think it's an exciting one that everyone's watching out for as well. But let's just talk about the FMCG space, and we have Colgate that's going to be in focus. And why is that so? Because Prabha Narasimha, who was appointed as the new CEO, now this is the first analyst meet that she will be hosting today. So all eyes are on this one, because what had happened is normally when you see CEO changes coming in the FMCG space, there's an excitement that you see coming in among investors. But that was not the case for Colgate. It did not react much like other FMCG companies have in the past. Let's not forget she is coming in from HUL as Colgate's new India MD as well. Now, you know what? Jefferies has come out with a wish list in terms of what they're actually expecting in terms of this analyst meet as well. One, they're highlighting that, in the terms of market share, Colgate has lost a bit of market share. First, it was 55% was the peak. Now, currently, it's somewhere around the 50% mark. So, they hope that, the management actually prioritizes in terms of the market share in the core toothpaste business, as well as continue to build momentum to get back past the peak through its investments coming in as well. What they are attributing, in terms of the move coming in is that the parent company of Colgate has a lot of tight control, which is dissuaded India arm of Colgate to actually go into a growth-oriented strategy. So they hope that Prabha will actually get past that, look at Colgate and the business with a new lens in terms of that as well. Now, other than that, what they are highlighting also is in terms of the portfolio. When you look at the parent company's portfolio of Colgate, what it comes is 45% share is from oral, while 55% comes from personal and home care segment, while for India, 90% is currently coming in from the oral business. So that's a factor, to put into play as well, that, how are they actually launching new products, ad spends, will they be focusing on that strategy which is there in the global Colgate parent company as well. Other than that, obviously, they're watching out for the glossary under the utilization in its network, distribution network, and hope the new CEO would harness this as well. So, interesting wish list coming in from Jefferies. Let's see how much of this actually comes out to be true, Somit.
Well, thank you, Benny, for that detail. Now, moving on to what mutual funds have actually bought and sold, and these are the stocks that they have bought and sold in the month of November. Now, in total, if you see, mutual funds have deployed close to 2,200 crore rupees, which was nearly 76% lower on a month-on-month basis. And sector-wise, if you see, they have added exposure in financial service and oil and gas, and they have reduced exposure in discretionary and auto ancillary. Also, the cash levels of mutual funds have come down to around 4.6% of AUM from 4.9%. Now, moving on to stock specific. In large caps, as you can see, they have bought Tata Steel, Zomato, NTPC, ONGC and Nykaa. These are the most number of shares that they have bought in these companies. But interestingly, if you see, mutual funds have utilized the weakness in the share prices of NTPC and Nykaa to add shares in the month of November. Now, in the mid-cap space, if you see, among mid-caps, despite a 51% run-up that we had seen in Union Bank share price in the month of November, mutual funds have bought more shares in this bank, while in case of delivery, mutual funds have used the decline to add more shares or add more positions in this company. Also, we have seen the selling in Indian Hotel coming in from mutual funds, and this was one of the stock which was added in the MSCI index. Now, in the small cap space, if you see, despite a run-up of close to 10 to 16% in Suzlon, Exide, RBL Bank and NLC, mutual funds have not shied away from adding more shares in these companies. While among sellers, if you see, EasyTrip has been on a downtrend currently, and it seems that mutual funds have used the 30% run-up in the share prices that we had seen in the month of November to exit this counter. Now, another data point that we should keep an eye out for is where most of the funds have been going of mutual funds in the last 3 months, because that gives us a trend in which stocks they have been investing. Now, in large caps, they have been adding HDFC Bank, HUL, Bajaj Finance, Asian Paints and Nestle, and they have reduced a stake in ICICI Bank, LIC, Wipro, Grasim and Varun Beverages. And when it comes to mid-cap, the highest additions have been in Balkrishna Industries, Astral, Alchem Laboratories, Star Health and Tata Communications, and they have reduced exposure when it comes to Aurobindo Pharma, Oracle Finance, Lind India, Aarti Industries and Thermax. And when it comes to small cap, lastly, they have been adding continuously Tejas Networks, Balaji Amines, Finolex Industries, GNFC and Cyient, while they have reduced exposure in GE Shipping, Eris Life Science, Rights, MedPlus and Lemon Tree.
Okay, Sumit, thank you so much for that. Let's move on. And S.S. Rajamouli directed period movie RRR is the only Indian film to make the final 5 out of a clutch of other entries from India. The movie has been nominated in 2 categories at the Golden Global Awards, which will be held in January. The nomination includes Best Non-English Language Film and Best Original Song for Nattu Nattu. The other entries from India included Gangubai Kathiawadi, Kantara and Cello Show. Remember, Cello Show is India's official entry for the Oscars as well.
Moving on, Saurabh Mukherjee of Marcellus Investment Managers says that one of their advisory portfolios has bought Infosys. Now, the fund also continues to hold TCS. Let's listen into Saurabh's take on the IT stocks.
Our advisory portfolios over the last couple of weeks, we bought Infosys, and we think this is the right time. We've historically had TCS, which we continue to have. And again, I get very amused when I see brokers sort of say underweight IT or underperformance in IT coming up, because that's like saying, take a short position in steam engines at the heart of the industrial revolution, right? Everything we are seeing in the world around us suggests that the whole world, especially the Western world, will have to automate further, will have to go to the cloud even more. And firms like TCS and Infosys are the kind of the sources, the workers who take the West into the world of automation and cloud. So we've used the sort of the whole skepticism around IT services, and this we fear that West may downturn AIGA and hence Indian IT services will be badly affected. We've used that to put Infosys in our advisory portfolios, and we continue with our TCS holding in our flagship product.
Okay, on that note, it's an end to this edition of Market Cafe on ET Now. Thank you so much from Sumit Sarkar, myself, as well as the team who put this show together. SGX Nifty indicating a bit of a muted start for the Indian markets, but don't go anywhere. The markets will take action forward.